Hello, welcome. A very quick one on Vix25, something that I just noticed, which I want us to look at so that it will guide your trading. All right. So straight into the video. If you like my video, make sure you subscribe, hit the notification button in case I drop any analysis or anything that is an educational content. You can have access to it on time. All right. So straight into the video. There is the Vix25 weekly time frame. All right. So on the monthly time frame, we are bearish. We are bearish on the monthly. As you can see, we had this order block being traded into here. Price traded into this order block. All right, and gave us that reaction to the downside. With this long wick, we went down and then came back, and we are still struggling to go down a bit. But as price went down, notice what price did here. We had a candlestick body breaking below this. So that was a market structure shift for us on the monthly time frame. All right. So let's go to indicate that we are still bearish. So price trading up, we are just trading into this. The wick of this candle is called a mitigation block. Mitigation block. This was the candle that came to mitigate this order block or hit that order block and rejected. So the wick is a mitigation block. Sometimes when the wick is large like that, price trades into 50% of the wick and then rejects, or 25%. So we can see that we are just around the 25%, and market seems to be going down. So important notice, we run into this fair value gap, order block. We run into this order block with this wick. We have had a market structure shift bearish on the monthly. We had that bullish push again back into the wick of this candle to mitigate it. And we are seeing that push to the downside. So going down to our weekly time frame, weekly time frame, where are you? Good, so it's here. So on our weekly time frame, you can clearly see the break here, a candle's body break. Oh God. Let me straighten this up. We see a candle's body break below this low. So that is a market structure shift. We already taking buy side liquidity, went into that order block on the monthly time frame. So price also gave us a series of up close candles here, which is an order block. So when we measure 50% of that, that is what price has traded into and is struggling to go down. All right. So let me measure the 50% for us to see what I mean. So great. So let me take my Fibonacci from this low to this high. From this low to this high. Look at it, exactly the 50%. It is called the mean threshold. So we have traded the mean threshold of the monthly rejection block. All right. And we see that massive push to the downside. So on the weekly, we have had a weekly market shift right here. Shifting market structure right here after we traded up. So this was a bullish move. Now we have switched bearish. And as we switch bearish, market or price will have to move from a premium range to a discount range. So this now becomes our dealing range. From this high to this low that was formed here becomes our dealing range. And above the 50% is the premium, below the 50% is the discount. And above, sorry, my network went off. We are back. So I was saying that above the 50%, we look for a bearish PDR because our analysis shows bearishness. So in discount, you look for buys, but in premium, you look for sells. So I'm of the view price will push up more into this bearish order block that is in premium before we sell. Above that, we have this fair value gap and we have this order block here, but I don't think price may want to go there. if you trade into this order block right here, price may resume the sell from there and then continue downwards, breaking this low. So when we get a sell from here, we can target this low, and then eventually all these lows here that are failure swing becomes a trend line liquidity, which we call low resistance liquidity run. Price is going to have little problem running through them. All right, though it has fair value gaps, it has down close candles. And what you are going to see is that when we close below a down close candle, the black candles, price will use that as resistance to sell. All right, anytime you go below that black candle, price will use it as a resistance to sell until we reach this low here. All right, so this is the main target that price may have to reach into in the very long run. So we look for bearishness towards that area. And if you want to swing, you can swing this trade. All right, so let me go to our daily time frame to see our daily time frame alignment. So on our daily time frame, you can see that above here is the 50%. All right, this is the 50%. So above the daily is the 50%. And look at where we had our weekly order block. We also have this nice fair value gap sitting on top, and these two up close candles becomes our bearish order block. And currently, price is consolidating, and we cannot reverse from a consolidation or retrace from a consolidation. So any move we see to the downside is a manipulation. All right. So price may manipulate the lows into this fair value gap and buy up again to sell, or sweep the lows and close back within the range, target the highs here as buy side liquidity, tap into the fair value gap or order block, and then we see that continuous sell. All right, so that is it on this daily time frame. On our H4, we can see we are trading inside of this bullish order block. So let's see what happens. We have already swept liquidity here. This candles wick swept this liquidity sell side, and we've gone above the buy side liquidities here as well. So price returning into the range, perhaps we came to seek this low. We are sweeping some daily lows, and you may see price continue up from here in the upcoming days into our premium fair value gap that we outlined. So I'm super bearish on Vix25 1S, but first we have to push up above the 50% into the order block before price decides to go down. Thank you very much. This has been easy for us. See you soon.